Hey everyone, Sarah here with Ratefair. Today we're going to go over 3 potential ways to get the lowest possible mortgage payment at renewal time. So the biggest concern right now is increasing interest rates. We're just seeing rates that we're not used to seeing, and people are coming up for renewal either right now or in the next year or two, and they're wanting to obviously get the lowest payment they possibly can. So first we're going to go over shopping around for a mortgage rate. Second is going to be increasing your amortization. And third is going to be looking at a HELOC, so a home equity line of credit. So stay tuned and we'll see what fits best for you. Before we get into it, if you like this content, please remember to like, comment, subscribe, and turn on that little bell for notifications on all the greatest mortgage info. All right, let's get into it. So the first way is to shop around for a mortgage rate. I know this sounds simple, but a lot of people don't do it. A lot of times they'll just accept whatever their lender sends them in the mail and whatever that rate is. And they're not going to be offering you the most competitive rates at renewal time. They just aren't. So find a good mortgage broker, aka me or one of my team members, and we can help you guys out. Keep in mind that you are going to have to requalify for that mortgage if you're looking to transfer that mortgage to another lender, and that the stress test and rules may have changed since you got your mortgage 4 or 5 years ago. But it's a good thing to check that out now within 120 days to 150 days before your renewal date, so that you're not stressed out and you have time to figure out a game plan and move forward to get you the best mortgage payment. So the second way is to potentially increase your mortgage amortization. So what does this do? This is essentially increasing the amount of time you have to pay back your full mortgage amount. So let's say you've had your mortgage for 5 years and now your amortization is 20 years. And now you're looking to increase that by 10 years, which spreading that over 30 years is going to decrease your payment. So this isn't the ideal situation. Obviously, everyone's goal is to pay down their mortgage quicker. However, this is for people who are now renewing and their mortgage payments are quite high and maybe it's something that they can't afford anymore. Look into increasing your amortization. This is something that could potentially help. And it's good to have a good mortgage broker on your side to run some scenarios and see if this is a good option for you. Another thing you can do is also, when you're refinancing, you can include any other debts you have. So if you do have some high credit card debt or other loans that are at a higher interest rate, it might be a good idea to put that and consolidate your debt all into one payment and see if that works out for you and your financial situation. So the third potential way to get the lowest possible mortgage payment would be to look into getting a HELOC, a home equity line of credit. And keep in mind, this depends on the property, as we have to make sure we have enough equity in the property to be able to get this. However, it is quite flexible if you have the right property for it. So talk to your mortgage broker, see if this is an option, but you can get pretty much any combination. A lot of lenders will do a fixed mortgage and then the revolving portion, which is the line of credit. So one thing to note here is that the line of credit is interest only payments. So this is a variable rate. It fluctuates with the Bank of Canada prime rate. However, you only have to pay interest only payments. And I know this probably defeats the purpose of paying down your mortgage quicker. However, if this certain combination creates payments that are doable for you and your family, this might be an option for you guys. You can also combine it with the previous point of increasing your amortization and also bringing in other debts that have high interest rates to decrease your debts and decrease your monthly payments. One of the nice things about a HELOC is that it doesn't have any penalties, so you can pay as much down as you wanted. So let's say you get a bonus at the end of the year and you wanted to put some money down, you can totally do that. And I mentioned before that it's interest only payments. So you can pay as little as you want as long as you're covering the interest each month on that. So these are some potential great options for you as long as the equity in your home works out properly, but it's best to contact a mortgage broker, go over these scenarios and see what works best for you and your family. All right, hopefully you guys found this information useful. If you did and you liked it, please like, comment, subscribe, or turn on that notification to get more mortgage info going forward. Thanks for joining us, you guys.